Well, we had the rand finishing at its lowest in 2 months on Friday, hitting 6.92. We've seen some upward movement on that price, further still at 6.94 thereabouts this morning. And some saying that we've got the currency likely to retest support at 6.95 against the dollar. Until that's breached, however, we shouldn't be targeting 7. What kind of trading range have you pegged out for the local unit?
Well, given the fact that the rand still seems to remain below the 7 rand psychological level, we do expect the rand to trade more or less in a range of about 690 to 708. Given the fact that there's still risks associated with the European debt concerns, we're seeing that the dollar remains fairly firm and the gold price is moving higher, as well as risky assets such as emerging market currencies are selling off. And the rand seems to be weakening more than other emerging market, more than its emerging market peers, on the back of the fact possibly due to the industrial action that we are seeing. So we do generally see a target towards, as I mentioned earlier, 696, but a trading range of about 690 to about 708.
Let's bring it back to some of those local factors at play. You've touched on industrial action that persists in some of the sectors here locally. Also to bear in mind is that we've got a slew of economic data being anticipated this week, and amongst them, those inflation numbers in particular. What are your expectations in that regard?
Well, we're expecting inflation to come in at about 4.9% in June, year on year, from the 4.6% that we saw in May. And that's really expected to be driven by both the food and the transport components, which we have seen come through over the past couple of months. If you recall that in May, we saw a 29 cents per litre increase in the petrol price, which really drove the transport component much higher. In June, if you recall, the petrol price increase wasn't as stark. In fact, I think we saw a decline of about 2 cents in the petrol price. So I think we're going to see less of the pressure come through from the transport component. But in general, we are seeing inflation head further north.
It's, of course, that together with retail sales numbers that will be taken into consideration at this week's MPC decision. Consensus is that we're going to see interest rates being kept on hold and focus more so on the kind of rhetoric that emerges from the Reserve Bank governor herself. So your expectations there?
Indeed, I think the more of the concern is going to come from the rhetoric of the MPC statement and what the governor is likely to say. We do expect the Reserve Bank to keep rates on hold for the remainder of this year. We only expect a breach of the inflation target in the first quarter of next year, and a commencement of the monetary policy tightening cycle to commence in the first quarter of next year. So very much similar to what we saw at the last MPC meeting, with a fairly neutral stance with regards to the data that has come out.
Well, we've put a lot of focus on what's happening locally, but of course a lot of this direction, as we said at the top, being provided by global developments. And in the US, we've got the White House deadline, Friday the 22nd, emerging for that deficit reduction deal to be struck. With that being the case, we've got a lot of speculation as to whether or not we're going to see further monetary easing on the cards, because that would potentially flood global markets with dollars. What are you anticipating there, and what kind of dollar movement are you pricing in?
Indeed, if we don't see any kind of debt seal or agreement being reached, we obviously could see the dollar come under significant pressure. However, I don't think that that's going to be too much of a concern. I do think that the main impact now is whether the US is able to repay this debt, and whether they are able to continue along the same sort of line that they have been with, and avoiding a default. At this point, I think the dollar is expected to remain fairly firm on the back of the fact that those debt concerns in the Eurozone is still quite right. Even though we did see the stress test coming better than expected, I think the confidence is still lacking with regards to the way the stress tests have been conducted. And as you mentioned earlier, it's only about 60% of the banks in the Eurozone have agreed to those stress tests. So I think the concern is really still surrounding the concerns in the Eurozone and what we're likely to see going forward. Obviously, we could see the dollar come under some pressure, and that could obviously see rand movements being altered as well.